pays for what? Let's face it, the most expensive part about owning a property is all the outgoings you have to budget for, which means that when you get the money coming into your account, you can't actually spend it or put it towards your lifestyle. You actually have to save it to pay all of the outgoings. So really, if you own a residential property right now in Sydney, Melbourne, or Brisbane, you're actually subsidizing your tenant's lifestyle, because with the amount of rent they're paying you, they normally would not be able to live in the same luxurious suburb or house. However, there's a little secret that people aren't telling you out there in the world of property investing, and that's in commercial property, your tenants pay for the outgoings. Well, that means land tax, rates, water. What about special levies? What about management fees? What about when you have to do maintenance on the property? Does your tenant pay for all of those? Who pays for what? This is what I'm going to cover in this video, and I'm going to share with you what kind of leases in commercial property, what kind of tenants pays for what kind of outgoings, and if you stay to the end, I'm going to share with you tips that I use to get my tenants to pay for all of my outgoings. My name is Helen Tarrant, and I help everyday Australians become wealthy through investing in commercial property. I help you build a cash flow rich portfolio through utilizing my 3 key strategies of cash flow, growth, and uplift. And if you're thinking of retiring the next 5 to 7 years, commercial property can get you there in a much more secure and less risky way than versus residential. How? Join one of our upcoming events, absolutely free event, or book in for that strategy session, and we can show you how commercial property can help you retire much faster. Now, without much ado, let's work out leases. What exactly is a lease? In commercial property, lease is your Bible. The lease actually details what exactly your tenant needs to do, what you need to do as the landlord, and how the two of you are going to interact going forward. Sometimes leases can go for 30, 50 years. Some leases might go for 1 or 2 years. Now, leases come in varying sizes and shapes and amounts. Some leases might be multi-million dollars. Some leases might be $5,000 or a few $100s. Now, the terms in the lease vary from lease to lease, so there's no blanket rule, but there's some general rules of thumb which I'm going to cover for you. Number 1 is all commercial property are traded on net rent. Now, you might get a tenant that is part of a strata property, and it might be a retail tenant, there might be a hairdresser, and she's only paying, let's say, $50,000, and that's all the rent she's paying. Now, in commercial property, that's called a gross rent. That means that the tenant only pays you one lump sum. Out of there, all of the outgoings comes out. However, if the outgoings that the tenant is supposed to pay, or under that $50,000, is $10,000, her true net rent is $40,000, which means that when you're going to buy the property or sell the property, we're looking at the pure net rent. So all the outgoings gets taken out, and that is your land tax, your management fees, your insurance, all of those things, strata fees gets taken out, and that $40,000 is what we use as the benchmark to make the offer to purchase your property. But when you are the landlord, you still want to make sure your tenant pays for all the outgoings. So how do we work through the leases? So number 1, the broad category of leases is that gross lease, where like the hairdresser pays $50,000, you pay the outgoings, and the net rent works out to be, let's say, $40,000 after all outgoings have been taken out. In commercial property, the correct way to calculate all of the outgoings is you have to actually take away every single outgoing, but not including maintenance of the property. So that means you take out land tax, you take out management fees, you take out strata levies, and that's both sinking and admin fund, plus you take out anything to do with the management of the property. So let's say that, for example, there is common water, common electricity, common cleaning. All of those things affect the property because you're one of 10 in a complex, or you bought a shopping strip and the tenant's one of 10 in that shopping strip. All of those gets taken out. There's usually a schedule, and that sum or that amount at the end of a 12 months is the amount of outgoings the tenant is liable to pay you, and they pay it on a monthly basis throughout that 12-month period. But your property manager does a schedule so your tenant knows exactly what the outgoings are, and they pay it on a monthly basis, broken down, added to their net rent. So if your tenant has a gross lease, they typically pay a little bit higher than market in terms of their rent, accounting for the outgoings that needs to come out, and then you have the net rent. So that's your very, very basic rent. Very, very easy to self-manage a property like that. Very, very easy to calculate how much the increase is, because really you're just looking at the one set of rent. Now, the next level up is what we call just a net lease. So the lease is net. So the way that it's expressed is that, for example, let's look at the hairdresser again. She's paying now, instead of $50,000 gross, she's paying $40,000 as her net rent, which is her baseline rent. On top of that, we're going to add our outgoing. So it's base rent plus outgoings plus GST. The GST, of course, gets added on, and you may be able to claim or not claim that depending on whether you're registered for GST. Now, that's an accounting question which I can cover off in a separate video. Now, so the next one is obviously the net. So the net will mean that the tenant pays a certain amount of outgoings. Now, the typical outgoings are the ones that they have to pay statutory wise. So that's your rates, your water, right? Those are the two that needs to be paid. Not necessarily your land tax, but your rates and your water. And often it's your rates, your water, and your insurance that has to be paid under that general terms of the net lease. Now, often what's added into the net lease is management fees as well. So you've got your insurance, your rates, your water, and management fees. So these are your basic net rent. And that's quite common with leases across Australia and across the board. So when it's expressed, you can find a provision in your lease that says, yes, the tenant pays 100% of the outgoings, and these are the outgoings. And typically those are those four things. That's your standard net lease. Now from there, you say, yes, there's certain things that the tenant aren't paying for. And remember, all things in commercial property is traded on net. So those things actually come off that base rent. You ultimately trade the property based on that net rent. So let's go up another level. We have what we call a double net lease, or double net lease, which is not commonly talked about. And it's one of those things that's really, most people just lump it together as a net lease. So double net lease doesn't really, is not really termed or called about in the market, because most times people just say, look, it's just a net lease. Now, double net lease is one level up. So they pay for things, a few things such as more than the statutory things. So land tax is added in. So remember, the first net lease, you typically have your rates, your water, your insurance, and management fees. Well, the second one has land tax thrown in. So the double net lease have water, rates, management fees, insurance, and land tax. So those 5 things are added in. Sometimes they might add in things like the tenant may have special clauses in there to maintain a certain area. So let's say you have an industrial tenant and they have pretty heavy duty use of your pavement, pretty heavy use of your roller doors. Your tenant may be then liable under the lease to actually maintain those. So it's not part of your maintenance because it's specialist to them and specialist to high wear and tear. So that will fall under some general maintenance, which will often come up under these double net leases. Now, of course, remember the market is termed as double net, but commonly just called net. Now, the next level up, right, is your ultimate level where everybody wants a tenant like that. This is what we call the holy grail of commercial property leases, and that's triple net lease. The triple net lease is usually paid by medical tenants or your AXS listed tenants, or things like childcare or petrol stations. So when I talk about AXS listed, so they're a national or international tenant, so they pay for all absolute outgoings, and most of the time these facilities are pretty large, so a whole building, a whole industrial warehouse, or maybe a whole ground floor of a certain building. You might find childcare centres because they're specially built, medical centres specially built, and also petrol stations specialised use, right? Those tenants are triple net tenants. So for example, if you get the tenant that's in cold storage, an Amazon tenant, a logistics tenant, you might have a medical centre, all of those tenants pay for absolutely everything. But what is absolutely everything? That means the tenant pays for every single expense that is related to the property on top of their rent. So it's expressed still as base rent, plus outgoings plus GST, except the outgoings definition in the lease gets expanded. So they not only pay for rates, water, insurance, management fees, land tax, they also pay for things like management of the property in terms of communication. So let's say that you need to post a statement to the tenant. They pay for that. Let's say that you need to get workers onto site let's say that they need to have certain parts of the roof checked, fire checked, let's say sprinklers checked, or any of the things that are compliant to making the building operational, the tenant pays for that. So it's maintenance on top of that. And clauses could be added into those leases, like the tenant needs to maintain the air conditioning on a certain time and date, which means maybe every 3 months, where typically your normal tenants might clean or maintain the air conditioning every 12 months. These tenants might do it every 3 months and they have to produce a report. They might have to do environmental testing to make sure if they're related to hazardous goods or environmental waste, or they're a mechanics warehouse, or potentially at somewhere like a petrol station, they might have to do remedial works, or they might be in charge of testing the soil. All of that is part of the tenant's responsibility. So when we're looking at triple net leases, the tenant pays for absolutely everything. So if you're looking at the tenant being like medical tenant in a strata property, they will pay for both the sinking fund and the admin fund, which is basically the maintenance fund for the property. So as part of triple net lease, your tenant actually maintains the property on your behalf to take care of it as if it's their own, and making sure the major things on as wear and tear is taken care of. Of course, you as the landlord have to pay for capital works, such as maybe replacing a roof, replacing the air conditioning unit, replacing a hot water system, if that is specified in the lease. However, if your tenant has put in specialist equipment into the property, then those items could also be part of the tenant's job to replace. I've often seen roofs and major capital works need the tenant is going to replace when you're in large industrial properties where they use corrosive materials, or things like childcare where it's specialist built and specialist done for them as well. So each to their own. All leases are made differently. So the most important thing to take out of it is that while leases vary, you've got to read the fine print. And if you don't know how to read a lease, it's worthwhile to connect with a company like ours here at Unicorn Commercial Property, where we help everyday investors become wealthy through commercial property. We have our in-house due diligence team as well as our in-house legal team to help our clients understand leases and what's their obligations under the lease. So if you don't know, do reach out to us. You can drop us a line below and book in for that strategy call as well. So here's my tip. So now you've come to almost the end of the video, so thank you for watching this far. So I'm going to give you my tip of how to get the tenant to pay for all my outgoings. Now, you might have a property or multiple tenants in a property that is not paying all of the outgoings. Now, you can't make the tenant pay outgoings until you get to a market review. So you have to bide your time. So let's say you want to do an uplift on a property, or let's say that you've got tenants who are paying under market rent and you really want them to pay off the outgoings, so it's costing you a bucket load and you're not making any money from the property. Then you need to wait for that lease review time, or that market review. During market review, you need to go and get a valuer. You need to go and get a valuation done by a licensed valuer, as well as from several real estate agents, to show you what the current market rent is, what's the current outgoings, and negotiate with the tenant. Potentially, it would be worthwhile in this case to charge them a little bit less net rent, so a little bit less rent, but get them to pay the outgoings on top. So overall, they're paying a bit more, but based on the market. So let's say the tenant's paying $200 a square meter. We come to market review. The market is saying that it's $240 a square meter they should be paying, right? That's a 20% gain, right? Most of the tenants may not want to do that. So what you want to do to say to the tenant is, I'm going to put your rent up to $220 a square meter, but I want you to pay the outgoings. So I want you to pay X, Y, Z outgoings, right? Maybe that is the rates, the water, and the land tax, or the rates, the water, and the insurance. So you start off with that, and that's your first round. Right? And then the tenant might agree to that, because overall they're paying maybe then $250 rather than $240. But in that case, you are actually starting to offset some of your outgoings. So the idea is, if you have a large center and a shopping strip, or you have multiple small properties and your tenant's not paying outgoings, what you need to do is gradually try to offset that over a time period. Now, that's not going to be over a 12-month period. It's going to be a 2 or 3 year period. But the best thing sometimes for you to do, if it's a tenant that you think is going to stay and they just happen to go to the option period, so their option when they're meant to tell you whether they want to renew their lease or not, it may be worthwhile for you to actually not notify them of their option period coming up. See, if you don't notify them of option periods, then the whole lease gets thrown out, and that means you get to renegotiate a new lease. If you renegotiate a new lease, anything goes. You can define the market, make them pay outgoings, especially if you know the tenant needs to be there because that's where their business is, that's where they're performing well, and that they don't want to lose everything by losing the lease, and it was a real oversight. Now, these are some of the strategies with a good property manager you can really implement to get the best value of your property. Remember, if you can get your tenants to pay even 10% or 20% of your outgoings, that adds directly to the value of your property at the back end. So these are some of the strategies. I look ahead and I look at when the lease reviews are coming up for my tenants, when the market reviews are, and I plan accordingly depending on the type of tenant. If the market's really changed and I want to increase the rent, then I may want that option period with my tenant to lapse. Then I have a brand new discussion, and then I end up with a new lease with new terms that I'm much more happier with, gives me more value on the back end going forward. Now, lease negotiations is not for the faint-hearted. So if you don't have a good property manager, or you simply don't know how to manage it, how to get started in commercial property, do join us, because you do need a team and a community behind you. We have here Unicorn Commercial Property, the largest community in Australia of commercial property investors, all starting out from residential, and you too can surround yourself with like-minded people and join in one part of our education, as well as our buyer's agency, or one of our syndicated group deals. All you have to do is click the link below, register, and I will see you either at my next event or on the next video. If you like this video, thumbs up, hit the bell, subscribe, leave us a comment, engage with us so I can give you more videos like this. Bye for now.